excuse me, happy Wednesday. Is April 2nd, not April Fool's Day, and I believe it's National Fact Check Day. So no, Warren Buffett did not buy Tesla for $1 trillion. But it sounds like Elon Musk is stepping away from Doge. We'll see how that plays out. Apparently, the Tesla buyers like it because the stock is going up. Markets are up for the day with a decent little rally. Not a ton. We gapped lower, fought all the way back, kind of settled back in right around the close yesterday, hanging around this 59.48 level. Trade I had on this morning for SPX right now. Still upside down. If traders with me this morning, we took a 235 credit, still trading for about $4, which is small loss, certainly manageable. Kind of letting it go all day, and prices have fallen back a little bit. So we had a decent move from low to high. I mean that was like 1 point some percent. We had a 2% move from low to high today. So market up about 2.2%, faded back in. We're settling in. I closed the trade out for a small loss. The 235 credit I closed out for 750. Just in case it's going to continue to drift. I had other trades getting filled. I have bull put spreads down here. I have a bull put spread down here. I have a bear call spread up here. And so I went way out of the money. So at the end of the day, 235 credit closed out for 750. So that is a minus 515 loss. Okay. And then I took in 50 cents on a credit spread, took in another 50 cents on a credit spread for a total of $1. If those close in the next 54 minutes for profit, then this ends up being a loss of minus 415 on the day. Certainly able to survive and move on and not have to sit and wait. This trade that I said closed out for 750 is trading now for about 410. So it does do a little bit less damage. Still be about $1.60, $1.70 loss, but just certainly a different look to the overall day. But pretty wild day overall. Just low to high, pulled back in, let the market makers do their thing. There's certainly left prices drift. I mean, going all the way up to 56.95, that was probably like a 4 or 5 delta at the center this morning, which is quite a bit of movement. And of course, I'm curious how the next phase of the market goes over, let's say, the next 48 hours. I mean, from Thursday, Friday's price action, let's see what futures does overnight. Trump's announcement is going to be 4 p.m. I'll be live in a webinar. So if you'd like to participate in that or just stick around and see what's going on, I'll be spot checking the prices in the futures market after the announcement. I think that the, buy the rumor, sell the news is kind of the play. Here is the SPX things I was watching on the technicals. So we did have a signal line crossover on the MACD. We also had bullish divergence on the relative strength after hitting oversold conditions on both the 14 and 21 day relative strength. And we also are seeing that money flow is heading higher. So at least in the near term, I could see this market getting a bit of a rally. Again, this is kind of playing games around this 200 moving average, having a couple week moving back up on the buy the rumor, sell the news. I don't think this market goes to all-time highs. I truly don't. But if we have a support level that becomes resistance, I could see the bears still being active around that 57 to 5800 zone, possibly up into even like the 5900 zone. Let me see. I've got a call condor trade for my waterfall class. We have expirations for the 560 level this week in waterfall, 559 as well. Net still have a bit of a drawdown, but I'm watching these trades closely. So this trade is upside down. That's the 560. Okay. This one upside down about $200. I'm going to see if we can hang out above 560 by the end of the week. If we get through, let me get the April 4th expiration. So 560 is trading around a 37 delta right now. I'd obviously like price to go a little bit higher if it could. Goes a little bit higher, makes these deltas lower, increases the probability of profit. That could be a good thing. The nice thing about this recent move is we are sitting once again, delete this for a second. We're sitting again at this 200 moving average. So it's kind of right back where it was when we had a test of the 200 rejection, test, rejected 3 times. We kind of tested again. I could see this being the ugly test area. But, bouncing off these lows, watching the lows carefully. If the market can go a little bit higher post tariff announcement, once the market is kind of clear with what the deal is it a blanket 20% tariff? Is it a blanket 25% tariff? Are we going to negotiate with certain countries? I don't know. All this apprehension and angst and anticipation, I don't know if it's good or bad for the market. Certainly, it's been a lot of volatility the last couple of weeks, on top of the rotation and all the sentiment to the downside. Everyone's bearish and everyone's worried about a crash, which for good reason. I think there's potential threats out there that could make this market fall really hard. We've had a great run for a long time. I know you look back historically, it's like, well, we've survived, 2020, we survived 2022, and we survived 2000. I get it. Now, this market's been amazingly resilient forever. But it doesn't mean that we can't have an uglier pullback. This being 10 to 11% does not mean the bottom is in. So I think if traders are lucky, we could see something like this. We have a high to low swing. We did breach those lows briefly, but if this sets up with some type of reversal pattern, I could see this market coming back up into this support resistance zone, finding some symmetry, and having some type of harmonic pattern that then the bears step in and say, okay, you're not going to break the highs. We're taking this right back down to lows. And, an easy swing would be high to low. Take the swing high to low, look about 50%. Between the 50 and 61% zone would be your 5-0 and 618 zone. If they pull back to there, if the bears start to tip this thing over, I would be looking for a 127 extension or beyond for another swing. So we will see. Right? Yeah, Christian says perhaps a W. Yeah, maybe. So you're looking for something like this, right? You want to see that kind of W look? Yeah, maybe. But I don't see that W getting all the way back up to highs. I see that W offering something with symmetry off of a low to high swing, if we're lucky. I mean, we could also just see a bear flag. So we can come up here in the short term, right? And then the market goes bye-bye, right back down to the lows. Do we defend the lows? Do we not? If this floor breaks, that's where I want to be cautious. This is why I'm running a masterclass for crash insurance tomorrow at 4 p.m. The webinar is today at 4 p.m. If you want to get involved, I've still got a couple spots left to jump into that class. It's $197, and we're running a masterclass series for the entire month. Strategy guide is done. Video will be done here in a couple hours. I'll get it posted for class tomorrow. But I will have trades on that will help keep my portfolio pretty well protected going into the rest of the year. I think that's one of the most important things I could do for my portfolio is make sure that I'm not going to get caught on the wrong side of some silly move. Okay, so here we are for today. I got a lot of lines here. So far, this is looking good for profit. So far, this is looking good for profit. So far, this is looking good for profit. So I did take a loss this morning. I'm going to finish, even with these little wins, it's going to be 1 loss, 3 wins, and I'll finish slightly negative on the day. But fighting the good fight, survive, trade another day. Tomorrow's a new day, which I'd rather have that than taking on a full loss and not trying to get back a little bit. So anyway, we're sitting like 4 points away from the level. If it just hangs out around 56.50, then the brave traders that stuck this out for daily profit play through the entire day are still in some profit, maybe seeing this thing go back to break even towards the end of the day. Right now, that trade is, let me go to SPX, 750 is trading for 375. So it's down about $1, let's say $1.40, $1.50 right now. Certainly a manageable loss. If you want to ride this thing out all the way to closing bell, as long as it's below 56.50, there is full credit at 235 or even hitting your profit target. But we're right on that line. So if we continue to slide a little bit lower, this gets better. This will probably quickly come down sub 3, maybe into the mid 2s. Break even would be a good result today after just kind of hanging in there for the entire day. But this is a pretty abnormal day. I mean, the market maker is looking at about 45 points this morning, and we had a 124-point rally. Now, the net for the day, we gap lower, right? We gap lower. So from open, this market moved about 13 points. 13 points from open to now, right? So from close yesterday to open today, it's about 13 points. But on the open today, we expected about a 45 to 50 point move. There is your open, and we're up around 65 points. So still beyond what was expected, way beyond that when you come to the highs of the day. So anywho, that's where we're at. All right. 10-year yield had a nice little chunk lower the last couple of days. It's not a bad thing. I do think that the U.S. government is trying to get this 10-year lower. We are getting some positive signs of inflation. I shared this in my Telegram today. This is Trueflation, which I think is a pretty good third-party reading. I know that we read headline CPI, PPI, core PCE. We look at like the Fed data, but I think this is a variety of things that are measuring what else is out there in the economy showing inflation ratings. Right now, U.S. inflation index 1.38%. So I mean, there are a couple really smart analysts out there that have basically forecasted, hey, in 2022, the inflation rate is going to go to 9%. It did. Uh, Post 9%, will probably go down to 3. We did. And now those same people are calling for a sub 2% by end of year. Now, to get sub 2% inflation and actually see it in headline CPI, it may come with an additional slowdown. So even though inflation down is a good thing, the broader market might still be selling off. Uh, you know, Concerns will still be there. I think the biggest hurdle right now is we get through this. This is so silly that we have to like literally just, fingers crossed that the market isn't doing anything silly, but that's what trade management is all about. Don't do anything stupid. Okay. But if we get through today's announcement, it's after hours. Let's see what the market's going to price in or do anything. Maybe futures rips after market. Maybe it doesn't. Tomorrow's a new day. Non-farm payroll on Friday. If we're somewhat elevated, right? I mean, there's room for the market to get a little bit excited. The bulls have been climbing back here since this Q1 ending low. Is it possible that the bulls keep climbing this staircase back up to the highs again? Sure. You know, I mean, it's very possible that all of the worry is now like, well, now that it's here, the market might find a way to go up. Now, why would that be the case? Because maybe it's not as extreme, maybe it's not as threatening, maybe it's getting countries to get to the negotiating table and we're talking terms, as opposed to just like blanket threats. You know, so we'll see. If the market's up, tomorrow, that's good. Hopefully, traders in my waterfall income service, I'll be watching these trades carefully. But if I start to see this, $670 drawdown showing some profit across the board, especially for this week's expirations, I'll be looking to take those profits. I wouldn't mind seeing the 564 XSP up to 567, 568, 569. Just get me further and further away from that 560 level, which should be a Friday expiration. Okay. So we'll see how it shapes up. Hopefully we can mitigate some of the risk. I didn't want to close out for a loss, even though it's manageable. Taking a loss here is I'll lose $300. I've made thousands of dollars in the last couple of months on this strategy. So I mean, if I wanted just to say, look, just wrap it up, don't worry about the risk. This is super manageable as opposed to I'm risking $1,400 and I'm down $220. As we're coming into the final stretch here, trying to keep it above 559. I'm risking, basically let's say $2,600 or so. Well, it's what, 30 minus 2, 28. So I'm risking about $2,700. I'm only down $135. So I mean, it may be in my best interest just to protect, not really have it be a threat. And I'm going to kick myself afterwards if price goes up. I really will. But the amount of risk that could come in a wave to the downside by this Friday is probably not worth the risk. So I don't know. I mean, I hate to book the loss, but taking a $350 loss is nothing compared to potentially, $2,800, another $1,400. That'd be my max risk. I mean, I'm risking like $4,000 versus being down about $350. Obviously, one sounds a lot better than the other. That being said, I don't have to do anything. If I don't do anything, I still have got about $1.64 and $2.64. So I'm looking at about $500 of profit. So if I'm right, I've got $500 of profit. If I cut it out right now, I'm losing about $350. If I let it go and I get prices below 559, I'm taking on some heat. Now, that being said, I don't necessarily lose the full $3,000 here. I don't lose the full $1,400 here. This would be a cash settled instrument. But the further it goes to the downside below 560, for every point that is lower, that's $100 of risk. So if I want to wait this thing out for Friday expiration, if we're at 559, 558, 557, 556, that is, the hundreds of dollars I'd be taking on a risk. So break even is 558. That's my break even. Right now, 558 looking at the option chain for the 4th. 558 is still trading around a 30 delta. So that's up there. Like that's enough where, you know, a move to the downside makes that an at the money. I take on some risk. We'll see if this market is resilient, but I guess my concern, like it should be, would be, is this going to dump right back down to the lows? Because if I do that, then I'm taking on a lot more risk. But if we're going to continue to climb through this announcement and Thursday is a good directional day, then we're probably going to see some profits tomorrow. So I guess we find out. I mean, I can roll the dice. It's going to have to settle back in. So here's XSP. Price would have to settle back into 558. I'll put a chart alarm here at 558. 558. So this is my waterfall break-even price. I'll set it at 559 to give me a heads up. Okay, so we'd have to have the index falling by 1%. I mean, it moved 2% today. So I know that's not safe, but technically speaking, if the markets can go lows, higher lows, have one more push to the upside, this is a little bit safer. Probably looking to take some profit if I can on Thursday. Okay. Dean, you're positive on that one? That's good, man. Did you ride that thing out for the day? It's trading at 56.44. We're in the final 40 minutes here. Let me see what that's doing. Let's go SPX. 750 is trading for $3. Okay. I mean, I mean, if I was in the position, I'd be down about $50 right now. And obviously a little bit more time. If it stays below 56.50, there's more profit there. But I mean, I'd be much happier with that $30, $40 loss versus the 515 I took earlier today. So good for you, man. I'm glad you stuck it out. That's the beautiful thing about defined risk. So, yep, market did in fact, cooperate. It was ultimately a level that we got in with a, 14, 15, 16 delta, and price ended up behaving for now. There's still risk above 56.50 if that was your sell leg, but if it goes back down, we're settling in to yesterday's close, which kind of makes this whole thing pretty interesting, right? We have a close yesterday, open today, and high. So low, high, we finished kind of right in the middle, right where we close, and today is just nothing. Like it's a bunch of noise, and then we figure out what the market has in store for us tomorrow. So pretty wild day overall. But I'm looking pretty good for my other positions. I got 3 more running. So this is for 50 cents, 50 cents. These didn't fill. These can be canceled. I'll cancel that one and cancel that one. So 50 cents, 50 cents should be another full profit. So that'd be $100 minus the 515. So 415 net on the day. It's fine. Could be worse. But I'll keep spot checking this one. It's 250 right now. Yeah, close to break even. Okay, good stuff. All right, let's go top down. Let's see here. Delete some of these lines. Let me look at any breaking news today. Let me check my Discord channel. Let's see here. Amazon decided to make it big to buy TikTok. I saw that today. That'd be interesting. Trump told cabinet that Musk will leave administration in the coming months. That's from CNBC. Tesla's liking that a lot today. Tesla is up a decent amount. Tesla's up to 279. I'm looking to get Tesla called away at 247.50 this Friday. Looks pretty good to get it called away. I don't need to get super cute and fancy with the expiration. I mean, I could roll it out for another week and try to, press my luck and pull in another income trade. But here is Tesla. There's my covered call. And I'll just, if I want to roll it out another week, let me see what the option chain looks like if I rolled it out right now. So let me do quick roll this out one more week, keep the strike the same. And it's tempting. If I do this on the 3 accounts I own shares, it's another let's go 280 or so. So 2.80 times 300, another 840 bucks to the bottom line for another week out. There's no earnings on Tesla yet. Earnings will be end. I think I could sneak in another income trade here. I think. So well, let's see. I mean, now's a pretty good time to do it because if it crashes tomorrow, or whatever reason, I have no idea. But at the very least, I think Tesla, because we did break the 200 moving average, we can probably push up towards it. So if we get another push to the upside, is this a good enough stock to hang there and be above my 247.50 for the next week? So I think I'm going to roll this out one more time. I'm trying not to keep this rolled past earnings. Earnings is the 22nd, so I could roll this to the 11th, potentially roll it out to the 22nd, try to collect some more income on this. So I'm going to roll this out one more time. Let me go to a quick roll. Roll this out 1 week, keep the strike the exact same, get two. I mean, the spread's pretty wide. I'm going to try to get $2.85. No, 280. 283 got filled. Okay, so that's a roll. Tesla, partial shares. This one, covered call, roll this out. Quick roll the next week, 283. Filled at 283. Partial shares there. Partial shares there. Partial. This one should be the other account that I have it in. So there's my covered call. Quick roll. 283 out to next Friday. 282. Filled. Okay. Updating the break even on Tesla. The nice thing is that does bring my break even down quite a bit. So my break even's like in the 2 teens right now, which is down near the lows from March 13th. So that should put me. Got to find it in my tracker here. Rolled the 4-4, 227.08. All right, 227.08. So rolled to 411, expiration 247.50, covered call $2.80 to $2.83 credit. I'm just going to take the lesser of them. So new break even is 227.08 minus 2.80, 224.28. All right, so now if it gets called away, 247.50. It's almost $7,000. That's not a bad turnaround for potentially 3 weeks of holding Tesla. That's not too bad. And the nice thing is here is looking at the April 11th, going out for that sell call. I mean, that's trading at around there's about a 17% chance that that's going to be coming back in and finishing out of the money. So to me, that's a good thing. Probability is I remain, well in the money. Price gets called away, generate the income, and it's all good. So not too bad. All right, and I might do it one more week. Depends on what price does, but I think we're going to go back up to test this 200 moving average. I think once we get there, I could see the sellers coming back in a little bit, selling in, coming back down. Joy, are you saying that today is a low volume day? This move today? I mean, it wouldn't surprise me. I talked about that this morning in my classes, saying that this little recovery, if this is a low volume recovery, you got to wonder if the market's going to put the pedal to the metal with accelerated volume, and it's going to be a downward move. Now, the flip side is possible. I mean, we could have this low volume recovery that's just fighting back from these Q1 lows, and the market is just sitting on the sidelines waiting for more clarity, and the market could actually have a good day, like we saw, from a Friday to Monday gap like we saw last week. and maybe just have one good day to kind of position for this without it getting smashed back down. So we'll see. I mean, I would think it, if anything, the April 2nd getting out of the way, getting some more. I mean, hopefully there's nothing ambiguous about this announcement. If it's just blanketed, the market can price it in for better for worse. Um, and I really think the next big decision for the market is earnings. This tariff stuff has been noise that's kind of played in the hands of sentiment, and I think that's why this sell off accelerated to the downside. Um, but now that it's kind of out there, buy the rumor, sell the news, seeing some money flow indicators, seeing some divergence at these lows, I could see the market pulling back a little bit. If there's any type of optimism, who knows? But at the very least, to pull back into this, same high we had back last Tuesday, possibly into symmetry, possibly back into a 50% pullback zone from this overall swing from the all-time highs. So I'm going to kind of wait and see how it all plays out. But it's all coming in, whether you like it or not. So I'm going to be navigating it, watching it. Here's futures. Maybe there's a big jump in futures after hours. From 4 to 5, you'll see the futures market moving on the announcement, perhaps, and then from 6 p.m. onwards, like what's global flow is going to give us, and we come into tomorrow's trading day. I'm not sure, but let's see what the technicals do. Okay, what else? Levels today. So my real-time levels, 5,600 did hold pretty nicely. It was tested, came back up. We're kind of sticky around that 5,650 zone. We need to go see a little bit further out. So if we're kind of in no man's land, but like 5,600 to potentially drift into like the 5,670, 5,680 zone going out to tomorrow. If I go to, let me look at this chart here. Oops, not the whole thing. I do see some upside. I mean, this is today just with real-time flows, but coming into the market makers did a pretty good job of defending the lows. We talked about that today in class, and also having room to run up towards the market maker highs. So, I mean, this is why the software is so good. I mean, this low, this high, we used it, we bounced off it, we kind of found it, we rejected it, and here we are just kind of sitting right back in the middle. So, I mean, there's room to find directionally. There's room to drift up here. Let me actually take a look and kind of assess the numbers. So I have 5, 5, 5, and 6. So 5, 5, 5. That's 15, 21. And then the downside. I mean, we have some more bulls and bears. Let me check SPY. I can get a better reading on SPY sometimes. See if these levels have been touched or not. This is a good thing on the SPY. Okay, yes, the SPY could be smashed back down here towards 550, and that's a pretty large level at 550. That really is. That being said, though, there's at least a lineup here between 570, 571, and 572, which I think overall these are going to be a little bit greater. You've got about a 1,500 net position size here. So if I went, we'll go 700 and 600, that's 13. Just add this up. So 13 and 350. So 1650, and even this last little guy up here at 330. So bull side has about a 1980 current net position, which hasn't been hit. None of these levels have been hit yet. So that's going to drag, prices higher or pull prices higher. That's fine. And the downside, we have this big sticky one around 906. So we have around 1980 to the upside. So 1980 to the upside, and we have about 900 to the downside. So right now the bulls are slightly positioned for better prices. That could be a nice way to open up tomorrow if we have this, gap higher. Depends on what futures does, but if we have a nice open tomorrow, I wouldn't be surprised if the market takes that open and then tries to fill the gap. Maybe a bad announcement or non-farm payroll. Maybe not. Maybe the market just runs and it's this big relief rally. Maybe. There's a lot of maybes. I hate this, but just looking at the tape right now, bullish sides have a bit more to go, and they haven't been hit. They haven't been hit. So if the bulls can get their fill and they can run prices up into here, that could force some delta hedging to the upside. That'll force, instead of all these sell sides up here, it's going to force the buy calls to get them neutral by the time we're going to these strikes. But this does look like a pretty hefty zone of resistance. So just like we saw this level act as support today, this could also act as resistance. So the nice thing is if we find it, that's a good thing. If we find it, there's a directional play. So that's kind of what I'd like to see. If we have a directional play here, awesome. That means that tomorrow, probably taking some profit on XSP, probably taking some profit on additional waterfall trades because we'd be far enough away that the 560 strikes should be hopefully out of the way, at least in real time, with only 1 day to go, that my theta decay is at a point where I can see the benefits of that. And I might just take partial profits. We'll see. I'm not trying to be greedy, but if I get waterfalls that are in profit, that's another like 4 winners across the board that I'm glad to take. Okay. So that's what I'm going to be watching for. So anyway, there's some optimism going into tomorrow. We do have one big sticky level at 550, but we also have this 570 to 573 area that I think price can find. Right now, we're right in the middle. So if this is sideways, I mean, look, it's kind of a coin flip, but there's larger pull towards the upside at 1900 to 900. And that's a good sign. So I could see prices trying to find this level. Obviously, in the next 25 minutes, it's not going to happen. But going into tomorrow, if futures is on the rally, we're going to see a gap higher. The big question is, does it gap higher and stay higher, or does it gap higher and fade? So, I mean, honestly, if I've got profit tomorrow morning, I'm probably just going to take it. Okay. All right. So just interesting stuff. Tesla, I just did the roll there. Break even is now 224.28, which gives me some wiggle room. I mean, honestly, the stock would have to drop 224. I mean, I'd have to have a 21% drop in Tesla for me to have any threat on the position that I'm in, which I'm obviously good with, and I can continue if I needed to. If price is back below 247.50, I'll keep selling calls and I'll keep chipping away. Like, I mean, obviously, if it's closer to at the money call, I'm going to take $14, $16, $20 of credit over a 1 or 2 week window, and that's going to quickly lower my cost basis. I obviously don't want to be stuck holding Tesla. I think with earnings on the 22nd, I'm pretty concerned that they're going to have deliveries are down or demand is down or something bad or blah, who knows. And that's like your next big uncontrollable catalyst where you don't know where prices are going to go. If the overall consensus says we're coming into earnings, I mean, remember, you're going to have financials lead the way. You'll probably have Mag 7, and I'm curious the week of Tesla. Let me actually go out and see if I go to earnings. Let's go here. Okay, so going out to the 29th of April, that's Tuesday. Let's go this week. So from the 21st to the 30th to wrap up the month, let's see. I'm going to move this EVR down to 2. This should give me a lot more earnings to work with and go submit. This should be a lot of earnings plays here. 91 stocks. Let me see if I can I sort this? Let's sort by, instead of sorting by EVR, let's sort by name. There we go. Now I can go in alphabetical order. Okay. So do we have any Mag 7s during that window? Not yet. I'm looking for Google. Yep. So that week, so April 29th, the same week as Tesla, we have Google that week, which means probably on Wednesday, Thursday, we would have Tesla is that same week. Maybe Microsoft is that week. So we have Google that week on the 29th as well. Go out the next week or the next. Okay. So this is the 30th, which is going to be Wednesday. Meta, MicroStrategy, Qualcomm, PayPal, Starbucks, Snapchat, Spotify. Okay. Tesla is, this is Tesla on the 22nd. My bad. Let me go back to that week then. So the 21st, yeah. So when the heck are our Mag 7s? Let's go 14th. Now we have more stocks. Let's go by symbol. I'm just curious, like when is Apple? When is like our Mag 7 prints? I don't see Apple. Where is Amazon? I guess I'll look at the freaking chart, huh? So Tesla earnings here. This says the 29th. Option Slam says the 22nd. My Tasty chart shows the 22nd. So TradingView has it incorrect, showing date on the 29th. Let's go to Apple. Apple earnings, April 24th. Okay, let's go Amazon, 24th. Let's go. We did Google. What about Netflix maybe being one? Netflix has earnings the 22nd. Meta, the 30th. Microsoft, nice little bounce off Microsoft today. This should be looking better for ratio spread. This one is an earnings play on the 29th. Let me check Microsoft really quickly. I've got some 111s. Microsoft. Right now, in profit, in profit, in profit. This is out 15 days prior to earnings. 370. I mean, we'd have to revisit the lows again. That low is a Q1 low at 367. I don't really want to take the assignment of Microsoft, but I would, and I'd repair it similar to what I'm doing on Tesla. So I mean, I've got the cash to take it, to hold it, to flip it. If I go out a week, this is kind of what I'd look to do. So my break even on this, if I was assigned on Microsoft, it would be low 360s. I'd have a 370 assignment, -5, -$2.30. I'd own the shares at 362. Well, if I went out very quickly and did a 1 week expiration, and I was, I'll just say that I'm at the money. An at the money call, I'm going to get about probably $6 to $7 of credit. So that 362 can quickly go down to like 357, 356, and hopefully it gets called away where I need it to. I make a few bucks on it, and I just repair it. So I can have the shares, get it repaired. Also, if somehow it comes back down into this window between 375 and 370, this could also offer up not just the 230 credit, but a profit trap on top of that. So these potentially pay $730, $728, and $720 depending on where price goes. Otherwise, it's still about 750 bucks. So anyway, that's just one I want to look at because the Mag 7's having a nice little rip today. Mags is here. I think this is an encouraging sign. If the Mags can get back up to the 200 moving average, I think that's a good sign. From this, kind of Q1 fake out, going back up to the 200 moving average would be a good sign. Also, from a pullback side, if this is going to be a bear flag, we might just come back to the same level again, right? Pull back to that same like 30% pullback level. I could see the market rejecting from there, but at least that gives us some runway to maybe see another push. If Mags leads the way, I think that push could be Mags leads, market recovers. We still see a pullback, but I'm just trying to look at the charts objectively. I think that's very possible. Do you think there's going to be a market crash today due to tariffs? No, I don't. I think the market crash is already, that was what Monday was. Q1 was that potential like test of the lows. Now the market's kind of fighting back. The tariffs, like I said, I think this is a very classic buy the rumor, sell the fact, or buy the rumor, sell the news, because I've said this before. I'm trying to make this very clear. Tariffs is not the reason this market fell 10%. Okay. The market fell for a combination of things. But this was already starting to happen, right? If you look at Mags right here, this was already starting to happen. Top 10 stocks represented 30% of the entire S&P. That is way too much concentration. We haven't seen that type of concentration since like the dot-com bubble, right? Or since the great financial crisis in 2007, 2008. So it needed to happen. So when it started to rotate, and this was just a move where it's like Apple's down, Amazon's down, Google's down, Microsoft's down, and then the discussion of tariffs, it's like the tariffs just kind of fueled the uncertainty and fueled the fear, but the move was still going to happen anyway. This was a large bar count on the S&P and the NASDAQ. We needed this rotation out of that heavy concentration. It was, I think, accelerated faster by tariffs. Now that tariff day is here, and we're going to find out what happens for this announcement. If this is a, buy the rumor, which is, hey, things are going to be bad, so you're short the market, and then the news comes out and you realize, oh, I guess it's not that bad. Well, there's a recovery. Now, I don't think this recovery is anything more than maybe a 30%, 38%, maybe a 50% pullback. That might be it. But I'd still think that this rotation still needs to happen. So I wouldn't be surprised, and this is why I have the yellow box in my charts here. I will be watching a swing trade on mags. I will gladly kind of not load up necessarily, but I will gladly participate in this position. And I don't know if mags is going to be around, right, as an ETF. I hope that it is because these are obviously household names. But are they ever going to change the mag 7? Right? I don't know. Like, is it the top 7 stocks truly in the SPY? Is that what represents this? What if something replaces one of the top 7? What if I don't know. If any stock comes in, here's like, does this ETF restructure and rebalance? Maybe. Rejecting the daily 5 EMA, now heading to the 20. So rejecting or moving through it. I mean, if anything, we're showing a bounce here, yeah? So futures heading higher is probably a good sign. Can futures break these highs? I'm going to put a chart alarm right here and see. I'll just go fresh highs. I mean, I might as well just know. So fresh highs. And just poking the highs doesn't mean anything. Are we taking out the lows? I got to know that too. So, I mean, I just expect the market to be pretty wild. So highs or lows, we'll find out. Okay. All right. Manageable. I keep going back and forth on this. I mean, we'd have to drop to 558. It's now a 28 delta. I mean, I just think like it's not really worth the risk if this thing's gonna drop $6 or $7. What would that be if we dropped like $9 on? I mean, it could do that in a day. I mean, today's SPY, low to high in the SPY today. So just in the last just in the last 3 trading days, it's up 21 points in the SPY. That's a monster week, by the way. That's a lot of volatility right there. So it's certainly more than the norm, but we'll find out. So I'm debating in these last like 14 minutes if I really wanted to avoid any type of severe pain, then I just take the $50 loss and I take the $160 loss, and then I sit on this one a little bit longer. But if I've got to have the courage to get through it. It's not just these positions I'm watching. It's like I've got these positions on 13 accounts. So that's why I'm like, yeah, I mean, this one, we'll give it a chance. I think the market has something to get excited about, or just a little bit more clarity, and it's not as bad as they thought. If Trump in any way is thinking, look, you're either blatantly thinking about crashing the market right now, or you're going to soften up the damn tone and you're going to allow the markets to have a little bit of a mental victory, because just hammering this sentiment to the downside is eventually going to crack this market to the point where this low isn't safe, and this low, when it's not safe, is going to be another 15 to 20% lower, and it's going to scare the crap out of everybody. I just think there's so much riding on this downside. Will have so much more momentum that I think a little mental victory could be helpful. But that's the thing, is you don't know. You don't know if that's what Donald Trump is doing or thinking, or if that's how this administration is going to be negotiating. That's the crazy part, is it could be like, nope, screw it. We're going 25% regardless. We don't want to do business with anybody that doesn't want to pay it. And you isolate yourself, and all of a sudden people are like, fine, I'll just not do business with the U.S. for a while and see if things change. DXY being down again. No, I said it's going to go down. I said dollar index is likely heading lower. That's my trade. I'm in euro dollar long. So euro dollar long is looking pretty good. Dollar index heading lower. I'm totally fine with it. I think that it's still not done necessarily, but having this move, maybe if you're lucky, a pullback here towards the trend line. But I think in this area, the dollar still has a leg lower. I think there's one thing that's pretty certain about this administration. They want to see a weaker dollar, and they want to see a weaker 10-year yield. I don't know how you can necessarily navigate a lower 10-year yield without having inflation go down, like consistently lower, and without really having too much more pain in the markets. I think that's the tricky part, is if we want to see like a aggressive U.S. 10-year yield going lower, we might have to see more pain to the downside of the markets. So, but the dollar, I think the dollar is going to get weaker. I think the dollar has all of the technicals lined up to get to a 102, 101, 100 handle before we start to see, if this is support. And that's a big if. And everyone was telling me to short the dollar last year. Chris, I'm short the dollar. And I just said, this is a bear trap. I thought this was a perfect bear trap after this rally all the way down and just squeezing, squeezing, squeezing. I just had a buy stop right there. Boom. That was an easy trade. So same thing here. It's like I'm testing the level on euro dollar long, and I'm going to test it back here at the backside of the trend line if I get it. If it goes lower, I'll cancel this trade, move a stop loss to break even, and see if I can ride this thing down to the destination. Yep, that's good. That's good. Yeah, to me, this is looking pretty okay for the next week or so. I mean, I think so. And honestly, like I said, we get through the buy the rumor, sell the news. The next really important news event will be all the earnings catalysts. And that's still pushed out another couple of weeks just because it'll be financials first. And, look, financials have passed all these stress tests since the great financial crisis. Financially, I mean, you take a look at some of the big banks. I get it. Like Bank of America sitting right at the 200 moving average, probably breaking some major trend lines. But we'd have to have like some ugly news for Bank of America to say things are worse. I'm sure they're doing just fine with money market instruments. I'm sure their trading desks at Merrill Lynch are pretty active. You go to JPM. JP Morgan was arguably one of the easiest shorts coming into this year because it was a ridiculously overstretched move, but it was up. I mean, we had a bar count of 330 bars. It was percentage wise. I mean, I don't know if it's ever been this stretched. It was about an 18% overstretched move from the 200 moving average. That was one of many stocks that did this. But anyway, point is why would it be, JPM going way, way down? It's like, I think banks will be positioned for some resiliency, and it just depends on the guidance. But you come into Mag 7, I think this is still one of the major, major plays for, at least some short-term resiliency would be Mag 7, financials, and not just painting this terrible picture of red. If inflation data is improving, if the 10-year yield's going lower, there's going to be a bit of a swell in mortgage applications and mortgage. I mean, the supply side is catching up on houses because nobody can afford to move anywhere unless rates go down. So yeah, I mean, I think for the near term, like it's okay. I'm definitely more concerned coming into like August, September, into the end of the year. There's a big liquidity air pocket where if these major refis that are happening, regardless, and the rates are not down substantially, then there's going to be like a big liquidity drain in probably Q3, Q4. But I think given the seasonality of typical markets, April, May, June are usually pretty solid. I do have my crash insurance masterclass. I've got a lot of charts on that, so we'll talk about that in class tomorrow. But typically, April, May, June, July are pretty bullish months. They have been for the last decade, over the last 20 years. Majority of those months are bullish. So March, April, May, about 65 to 7% of all those months have closed bullish, meaning higher than where they started. And so you look at the month for April. Is it possible that April, with this low in place, is April going to be a month that closes higher than where it started? If you go to SPX for the month, is it going to be a month that closes higher than when it started? We'll find out. And hopefully it's a month that looks like this. It goes green up here and then maybe fades. But I mean, a little green goes a long way right now. Okay. So again, there's a lot going on. There's a lot of uncertainty. I get it. I'm not trying to pretend that I've got a crystal ball, but I am actively trying to protect and not do anything silly. As tempting as it is to say I should just get out of XSP, take my small losses. I mean, if I'm brave enough to hang on to this with an $8 or $9 head start, I've got a buffer going into Friday. I could have probably, let's see. So 500 times 13, I've got about $6,500 riding on if XSP is greater than 560 by Friday, I've got some profit. That to me is worth the risk of giving myself right now. We're trading around 566. If I can hang on to that level, my true break even is around the 559 and 558 handle. So I still have a little bit of risk going into end of day Friday. As long as this market doesn't absolutely implode, then I should be okay. It's still defined risk. I don't think we're coming all the way down to 530, which would be a fresh low. That's not going to happen. So I'm not really taking on full heat of the trade, but rather I think the potential risk would be manageable compared to the reward that I'd like to see. And we're sitting here, coming back up towards the highs of the day, and if futures wants to get a rip as this pending announcement is coming in, then let's see what happens. So stay tuned. Right, by Friday end of the day, we'll have hopefully some stuff to talk about. I certainly will, but hopefully some nice profits to show as well. Commercial construction will be delayed by steel tariffs. Okay. I mean, look, I think commercial construction, I think building anything is probably more about rates than it is supplies and tariffs right now. Producers have also been producing heavier amounts, and buyers have been hoarding and buying and front loading this tariff talk anyway. So I think that's all been going on in the background. In anticipation of tariffs, all these business decisions to either have more inventory. Now the question is, depending on the tariffs, are you going to pass it on to the buyers? Right? It could be commercial buyers, it could be residential buyers, it could be consumers like us for simple retail products. But I saw something today on 25% tariffs on imported beer. Okay, like look, I'm sure stuff is going to get more expensive, but I think at the end of the day, this whole idea, the big picture here is the U.S. going to get back any form of some type of trade agreement that is slightly more favorable than what it's been in the past, and that's all this is about. The way the message is delivered, it seems very threatening. It's obviously very disruptive, but it's all about the U.S. has operated with like awful trade deficits for a long time, and if that can be tweaked to help the U.S. or be to an advantage of the U.S., great. But I think at the end of the day, it's like, can we negotiate? I think yes. I think we should. If we want to be this global trade partner, we should be negotiating, not being a bully. But I'm not in the White House. So, all right. I'm not going to stay live, Jonathan. I got to go to another webinar. I'm going to be live talking through a session, my Crash Insurance Master Course that starts on Thursday, but I'm going through another slide pre-zo today at 4 p.m. So I have to jump to that webinar. But if you're in my Telegram and my Discord, I will, I'll post an alert today or some type of update. I mean, I'll be watching futures. I want to see what price does. If there's any immediate reaction after the bell, we'll find out. And also, it's like, is it a press conference? Does the market react slowly? Is it like FOMC? It's hard to decide, or is it just, enjoy your day, sleep on it, wake up tomorrow and see where the prices are at. It'd be nice to see based on this. It'd be nice to see based on this right here. I'm going to take a screenshot and see that price can get up into this like 570 plus zone tomorrow. If we get up into there, that'd be pretty nice. So let me take a screenshot of this and timestamp this. This is March. Nope, it is April 2nd at 3:57 p.m. Eastern Time. Okay, so my question is, come on, can we actually make a run and fulfill this larger growing liquidity level? And we just have like a nice little series of them around 570 to 572. So if those levels get hit, awesome. That makes trades look a lot better for tomorrow. That'd be a nice little sigh of relief for the market. I still think there's resistance there, just being honest. I may not want to wait all the way. If these trades are profitable by Friday or by Thursday, I may just dump them. I might take like little to no risk. I might see if that like 1 day plus the way the options chain is looking, maybe it's a low delta, ride it out a little bit longer. But yeah, let's find out. So I think that's a good level to at least look for. This liquidity hunt could be heading up towards this 570 to 572. I'm not ignoring the 550, right? But we'd have to have a 15-point drop, and that would be awful to see it. It'd be terribly disappointing, and you'd see the market probably crater. So, I mean, at the very least, maybe an out-of-the-money put for Friday could be a great trade. But it's not going to happen all in one giant move. It's not going to be a gap overnight. We're going to have some flows to go with it. So I'm willing to kind of ride that out. Okay. Yep, I get it. I get it. The overnight section should certainly take us there. It could. And that's totally fine if it does, because when you open up tomorrow at those levels, then all these trades I was talking about could be profitable and should be profitable, because that's going to be another, $3.50 higher, $2.50 higher. That's going to shift these deltas quite a bit. So this would be probably trading at like a, sub 20 delta, maybe a 15 delta. And then the probability of that trade by Friday looks very clean to be full profit. And I'm willing to hang on to that a little bit longer. So yes, if the market's up to 570 tomorrow, I'm probably willing to stick it out, ride this thing out, and fingers crossed that April 4th cooperates with a nice little win, and hopefully I've got that $6,500 to show for it. So okay, all right, everybody. Telegram, I'm jumping in live at 4 p.m. If you'd like to join me, there should be a registration link for it. Let's see, that was yesterday. But the class I'm talking about here, it is my Crash Insurance Masterclass, closing bell. So I'm doing a class on this all month long in April, every Thursday. Crash Insurance Masterclass, best ways to know how to hedge the portfolio, manage the drawdowns, protect the portfolio to the downside, get some big reward to risk setups, control options on your favorite stock positions, and then play the hedges on the indexes. You can really protect a lot of downside risk. So even with these markets just off these lows, I mean, I'm not too far away from all-time highs again. So I'm back up to like 156, and it's 4 p.m. So I got to go, but I will be watching to see what futures does, and we'll see what this whole announcement gives. I'll be watching Financial Juice as well, see if there's any crazy real-time news. So here it comes, everybody. Let's see here. Which will pave the way for a disruption in international trade? Stocks experience another round of volatility. Will not impose tit-for-tat tariffs. EU plans emergency measures to guard the economy from Trump's tariffs. So, I mean, it just depends on allies stay allies or allies become frenemies. Frenemies become enemies. This is what we don't know. So, but we're about to find out. Okay. All right. I will see you tomorrow. I'm going to jump at that 4 o'clock webinar, and I'll see you tomorrow. It's going to be an interesting day. All right. Thanks, everybody. Bye.